With first-mover advantages, Tesla, the driving force behind the electric vehicle revolution, has taken the automotive world by storm. The company has experienced 3 years of profits in a row, but now a storm may be coming. In this video, we'll examine the critical topic of whether Tesla can continue to dominate in electric vehicles, even if its operating margin experiences volatility. We'll also look at the effects of Tesla's aggressive pricing approach and discover the more general worries that the business and its investors are facing. Come along with us as we analyze the prospects and problems facing Tesla, the leader of the electric future. But before we go any further, don't forget to hit the like and subscribe buttons. Greetings and welcome to Tesla Insights. Let's get this video going. Imagine being at a party where everyone is talking about the newest, coolest technology and fashions. At the heart of it all is the electric vehicle or EV buzz. It's like the hottest dance move that everyone wants to master, and Tesla is setting the standard right now. Now let's discuss numbers. As per a new analysis by Fortune Business Insights, the electric vehicle EV industry is expected to reach a staggering valuation of $1.58 trillion annually by 2030. What's the big deal with Tesla? Well, imagine this as a race party where Tesla was the first to arrive. They set up the music, put up the decorations, and started dancing before anyone else had a chance to put on their dancing shoes. That's like having an endless flow of cash, growing at a speedy rate of almost 18 each year from 2022 onward. It's mind-boggling. Advantage people notice and remember you for it now, just as when you're the first to bring pizza to a pizza party. Let's start by discussing the impressive entrance that Tesla made. With a market cap of an astounding $778 billion, to put it simply, they're worth more than all those traditional car companies combined. It's like having the best moves on the dance floor while everyone else is still figuring out the beat. But here's the real kicker: the EV trend is more akin to an endless remix that will be played for decades than it is a one-hit wonder. Investors are supporting Tesla because they think the company's early actions in the electric vehicle EV space will enable them to fortify their position in the auto industry, much like they would erect a fortress around their dance floor to keep others out. Without a doubt, Tesla has taken these early advantages and turned them into some very significant profits. The fact that Tesla is the only automaker with a focus on electric vehicles is one of its advantages. And regularly generates revenue. Yes, you heard correctly. Others may occasionally turn a profit, but their EV sections are more like money-eating monsters. While most other automakers may have some cash on hand, they are also drowning in debt. Tesla, on the other hand, is on track to turn a profit for the 4th consecutive year by 2023, all thanks to those fancy accounting rules. And speaking of money, Tesla has an abundance of it. At the end of June, they had a whopping $23.08 billion lying around. But that's not all, people. Tesla has the production capacity to outpace its competitors thanks to its cutting-edge factories in Texas and Germany. With the astounding goal of producing more than 2 million electric vehicles a year by 2024, Tesla is preparing for a monumental revolution in the automotive production industry. These state-of-the-art gigafactories mark the next phase of Tesla's ambitious German journey. While the Austin Gigafactory in Texas is prepared to completely transform the way electric vehicles are made in the United States, the Berlin Gigafactory is a symbol of efficiency and innovation, and it is positioned to become a center of excellence for electric vehicle manufacturing in Europe. Together, these two enormous production facilities represent the beating heart of a sustainable automotive revolution. They are more than just factories. With this bold strategy, Tesla hopes to break industry conventions and establish new standards in the production of electric vehicles. This shows how committed the company is to increasing production and lowering the cost of electric cars for consumers all over the world. The automotive industry is still changing. In addition to being an audacious ambition, Tesla's objective of producing over 2 million electric vehicles annually by 2024 is a clear indication of the company's resolve to lead the way in the shift to sustainable transportation. One thrilling automobile at a time. It's like breaking a speed record in a race. Nobody else can match this production of battery-powered vehicles. And let's not forget about the covert weapon. Elon Musk is the automotive industry's superhero, keeping a close check on everything. From a small startup, Tesla has grown into a massive automobile manufacturer. Since going public in 2010, the company's stock price has increased by an astounding 15,000%. With so many zeros, Tesla isn't just riding the wave of prosperity, they're making it appear effortless with their financial prowess and Elon Musk's magic touch, but things aren't going as planned. When it comes to its operating margin, Tesla is experiencing a bit of a roller coaster ride. Although the company's stock price is shooting through the roof, its operating margin is plummeting. This has been the case since September 2022. Tesla's operating margin dropped sharply over the last 3 quarters, ending on June 30, 2023, from a high-flying 17.2% to a fairly unstable 9.6%. This has many questioning if Tesla's operating margin will ever reach 0%. While it's impossible to predict with certainty when Tesla will go completely bankrupt, there are a number of storm clouds gathering. For starters, Tesla has been slashing prices on all of its models, from the Model 3 to the Model X, like a clearance sale before a major storm, and Elon Musk himself stated that they're doing so because demand may be cooling off. In order to get rid of excess inventory, they recently drastically reduced the prices of the pricier Model X and Model S, taking them from extremely expensive to just fairly expensive. However, the kicker is that these two models only account for 4% of their sales. In the meantime, the prices of the Model 3 and Model Y were also reduced, though not as much. Nevertheless, it's still enough to raise the question of whether they're trying to get rid of stock in case demand slows down, and there's another factor to consider: the price of Tesla's fancy self-driving technology was lowered. This is similar to lowering the cost of a burger's special sauce. It might taste good, but it will hurt profit margins. Until Tesla shares the details in early 2024, we won't know how all these price cuts will affect the company's bottom line. But with all of these drastic price reductions, one thing is certain: Tesla's operating margin is about to take a rough trip downward. Beyond its declining operating margin, Tesla's problems paint a complicated picture of obstacles facing the electric car industry. 1. Significant setback for Tesla in its path has been the absence of brand power and history in comparison to traditional cars. While Tesla is heralding a new era of electric mobility, it is still making its mark in the annals of automotive history. In contrast, the traditional automakers, known as giants, have built their legacies through generations of iconic vehicles, long-standing reputations, and deep-seated customer trust. Their logos are not just symbols, they are emblems of reliability, safety, and tradition. Nevertheless, Tesla has achieved significant progress thanks to its disruptive strategy and quick innovation, demonstrating that the new kid on the block can really change the automotive market. Tesla also made a big impression with its environmentally friendly image. The used car industry has been disrupted by the recent significant price changes. Leaving a trail of unhappy clients in their wake. Trust is like the glue that holds a brand together, and traditional automakers have plenty of it, so this pricing roller coaster isn't the ideal method to foster brand loyalty or trust among its current owners. Dreams of Tesla being more than just an automaker are likewise encountering roadblocks. Their energy generating and storage sector suffered a decline, and even while their supercharger network is popular, it's not a high-margin moneymaker. As we navigate this fascinating Tesla terrain, one issue remains as to how the firm will overcome these hurdles and continue its electrifying growth. The company's additional operations aren't supporting the company's margins significantly. We'd want to hear your opinions about Tesla's pricing tactics journey. The significance of Elon Musk and its ability to withstand economic uncertainty. If you found this analysis enlightening and would like to stay up to speed on all things Tesla, please share your thoughts and ideas in the comments below. Thank you for watching, and we hope to see you in our upcoming films.